All right. Good morning, good afternoon, good evening to you, wherever you are in this beautiful world. Welcome to our Inner Circle Live pre-New York session. I'm your host, Ryan Carthage. We'll be joined shortly by my awesome partner, Mr. Benny Allen. Hope everybody is doing well today. Let's get to it as always. Let's turn off all distractions, grab a pen and paper, let's take lots of notes, and let's make sure that we participate and engage. All right. And as always, we want to make sure that we kick off our day by taking massive action. And that action stands for, excuse me, accepting all possible losses before entering a trade, centering yourself, body, mind, and spirit, ensuring a balanced approach to trading. Trust in your education, strategy, trading skills, and intuition. Imagine your trade successfully materializing. Obey your trading strategy, avoiding decisions based on greed or fear, and never looking back or stopping once your trade has commenced. All right, so let's focus and let's get to it. All right, we will dive into fundamentals, review what happened yesterday, review a little bit on what we're looking for today. Then we'll dive into the charts. I only have a couple pairs that I want to just go over and review, and we can prep some of the dollar pairs. But I want to hear from you guys this morning to see what things you guys have your eyes on. And we can take a look at those and break those down for you. All right. So if everybody can hear me okay, and everybody is in agreement with the plan, drop me a 1 in the chat and we'll get rocking. All right, let's do it. So I apologize for my voice, a little bit under the weather this morning. But let's go. All right. So trading economics. Will the Fed give clear signals on rate cuts, right? That's what investors are looking forward to today, right? What will the Fed say regarding future guidance? The expectations that they hold rates, but what are they going to say about the future? Some folks are expecting potential 3 rate cuts for the rest of the year. So they're trying to figure that piece out, and the Fed hasn't given any sort of guidance, and investors are growing a little bit frustrated because they want to know what's going to happen in the future, right? So expected to keep the funds rate steady at 23% for the 5th consecutive meeting. Emphasize the importance of being confident that inflation is on a sustainable path toward 2% before considering rate adjustments. Policymakers also set to publish a fresh quarterly economic projections with all eyes on the so-called dot plot for insights into potential interest rate cuts and the timing of such moves. The latest projections in December indicated 3/4 point rate cuts by the end of 2024. Meanwhile, annual inflation U.S. Unexpectedly edged up to 3.2% in February from 3.1%, and the core fell less than anticipated to 3.8%, suggesting it is now getting more difficult to push inflation back to target, with services inflation proved to be stubborn. So what are we saying? As long as inflation continues to be persistent, it's less likely that there'll be the number of rate cuts that was originally projected, right? So that's what they're looking to see. They're looking to see if there's anything from the data that says, oh, things are easing a bit more than what we saw in the inflation report last month, and also what the Fed is looking for, like details on specifically what they're looking for from the data, so that as that data comes out, we have a better indication of what the response could be moving forward. So that's what we're looking for on the FOMC meeting today with the Fed. Yesterday, we had that one off my screen. So we'll come back and talk about it on the other. UK inflation rate slows to 2.5%. Inflation dropped to 3.4% year on year in February, down from 4% recorded both December and January, following the market expectation of 3.5%. Right, so it came in below the expectation of the market. It was also the lowest rate since September. driven by a slowdown in price increases for food and non-alcoholic beverages. All right, so the UK inflation is slowing. We're seeing decreases more than anticipated there. All right. And then European stock market slightly down on Wednesday as investors adopt a cautious stance ahead from the Fed's policy decision later today, with all eyes on the dot plot, like we just stated, and the timing of potential rate cuts in the future. Data revealed that the UK inflation cooled more than anticipated in February ahead of the BOE's meeting on Thursday. Right, so that's going to influence that conversation on Thursday. And then it talks about corporate news, which we won't go into in depth there. But yeah, so that's where we are from the European perspective. Over to the calendar. This morning, well, let's go back to yesterday, actually. All right, yesterday CPI for the Canadian dollar came in below expectation, right? So we saw some weakening in some of the Canadian pairs, and this is why, right? Inflation cooled more than expected. So we'll continue to watch the Canadian dollar and see how that currency fares over the next coming weeks as we move closer to their rate statement down the line. Then we had, that's the CPI number for the UK. Christine Lagarde spoke this morning, just giving insight on what the ECB is looking for and what their kind of path forward is. And this is her full statement. But she gave three things that the ECB is looking for as they move forward to look at any sort of policy change, interest rate changes or adjustments. The first is wage growth, right? They want to see wage growth decrease to 3%. Over the next 3 years. So they want to see that trajectory continue to move down from where it currently stands. That's the first piece. Second piece is profit margins. So they want to see profit margins and GDP. Also, the profit margins decrease. So ultimately, companies will slow down on their spending, which will then slow down on the wage growth, which will then slow down on people spending money, which will help decrease inflation, right? And then the third piece is they want to see productivity increase, right? So it's an interesting back and forth, but they want to see increase in productivity, but a decrease in profit margin and a decrease in wage growth, which will lead to lower spending, but more productivity, which will increase the supply, which will hopefully then decrease the demand, kind of, sort of, in a way. So those are the three pieces that the ECB is looking for going forward. Be making the policy adjustments. I'll send this link to you guys so you can take a look at it. But that's what she talked about this morning. And then today, this is what we're looking at, right? FOMC meeting at 2:00. NZD GDP quarter over quarter coming in this evening at 5:45. Then we have Aussie manufacturing and services PMI, and then we have employment and employment change and unemployment rate for the Aussie at 8:30. Right, that could also give us more indication on the Australian dollar and where the Aussie could be headed after their policy decision to hold things steady and be more data dependent. All right. And then tomorrow, as we talked about, got PMI data coming in for the Eurozone. And then we got Swiss National Bank at 4:30 and the UK at 8:00. Rate statements for both. All right. So that's it from a fundamental perspective. Anything that you guys have your eyes on that you want to bring to the table from a fundamental perspective? Joe, I know you posted some articles in the community yesterday. I didn't get a chance to look at them, but I will take a look at those today. Nope, nothing new. All right, Benny, good morning, bro.
Good morning, Ryan. Good morning, everybody. Ryan, how are you today, sir?
I'm doing all right, man. A little under the weather, but we're making it happen.
Hey, I
Glad to
appreciate
be
you
here.
being here.
And no doubt, man. Anything additional fundamentally? Top of
No,
mind
man,
for
you
you?
you you hit it right on the head. I posted some quick summary notes in the community on Lagarde's speech
Oh, perfect.
because I was reading about that. So you were spot on with that. Looking at holding, looking for more, remaining data dependent, right?
Yep, yep, yep.
She was talking they'll have a little bit more data by April and then definitely have, more data by June. So just continue to wait on the data, so you were spot on with that. That was the news of the morning for me. Other than that, you talk about the Fed, this afternoon with their projections and things like that. So just continue to move on, right? Every day I wake up, I'm looking ahead. Is there any major shift in policy that can cause things to go, in a different direction other than what my bias is? And the answer right now is no.
No.
So just continue to stay in the positions and hold the positions that I'm holding. So
Yep, yep. All right. Cool, man. I'm in agreement with you, dude. Nothing has changed the bias yet. So um if you guys were on early, you saw my screen on this dollar yen. Benny posted an update in the community yesterday, but let's take a look at it, right? We've been talking about 152 for quite some time. And as you see, we are headed there, right? Matching the extension on this 1 hour C to D move, 8-6 retracement, right? We're close to that 151,773 level, which will get us the matching D extension. And then, right, as we move backward on the time frames, you see on the 4, right, the matching D extension is here at 153 to 11, right? So this range that we could see could extend to there, like so, right? So we're headed there, and we're headed there, right? All of the planning and the work, 80-20, 50% retracement, moving to the matching D extension. And then as we bounce back to the daily, right, we got a daily D extension also in the same area right here at 152.205, right? So we're moving in that direction. We'll get D extensions hit on multiple time frames, and then we will see what happens from there, right? Bank Japan hasn't said anything yet regarding this move that's been straight up, like literally straight up. So we will keep our eyes as we get to this 152, 153 range. If the Bank of Japan perks up a little bit and has anything to say regarding the impulsive movement to the upside. All right. So my bad, everybody. There we go. So we shall continue to watch this from the C, but we're headed to the D extension. Right. Been a long, drawn out move since July on the daily time frame, right? But overall, this move to the upside coming off the 618 retracement is 1,400 pips, right? So we're on the go. We're on the go. And Benny's been on top of this one as it's been moving. And we're just sitting tight. Like I said, nothing has come in to change the bias yet. So we'll continue to sit, watch, and wait and see what happens. All right. Any questions on the dollar yen?
nope.
Nope. All right, cool deal. So we'll continue to monitor these. I'm gonna run this back like that. We'll continue to monitor that there. All right, so now that dollar CAD, we had that Canadian data came in weaker than expected, right? And that caused us to continue to push to the upside. So we had this AB boundary here moving long, right? So we take this out. Maybe, there we go. And we run this fib to the upside. Boom, right? 50% retracement, pushing along. We got daily resistance 136, 254. All right, and we'll look to see if price can break that level and continue its trek to the upside to make it to the matching D extension at 137, 647. That's on the daily time frame. Coming down to the 4. Continue to zoom back. And I'm going to do this instead. See where they got us at. Here we go. All right. So we got a capital fib running to the downside and our sub fibs running long. Right. So we'll look at it from both perspectives. Run that fib to the downside like that. Boom. There we are. We're pressing that A boundary there, right? At that daily resistance level. Once we're able to break that, then we'll see continue to move to the upside. But this move came off of an 80-20. All right. Shallow retracement 118, 127 zone. If you traded this out of the zone at its highest, that's 377 pips. All right. So now we're looking to see what happens at this daily resistance level. So we'll flip the fib and we'll run it long. And that's where we sit on that sub fib AB boundary. Like I said, ultimately looking for this daily level to be taken out. 618 retracement. So we're looking at that matching D extension, which is in line with that daily level as well. All right, which is in line with that daily D extension also. Okay, so all signs are pointing to the upside here, but we'll see what the Fed has to say regarding their rate decision and the conversation afterwards. And see how far this will push, or if there's something that surprises us and changes that direction. All right, any questions on the dollar CAD?
No, sir.
Nope. All right, cool deal. This is set up that Benny posted, NZD JPY, 80-20 on the 4-hour. Shallow retracement, 118 and 127 zone. We sat in that consolidation and we got the push Monday and Tuesday. All right, so we got the push out of the zone, came into level of daily resistance. So look to see if we can break this level, continue pressing higher as we move through the day-to-day, at least getting to that 382 level, potentially getting us back to 92,400. All right, so that's the 80-20 there. Looking at that move and then getting high prices to at some point when the Bank of Japan decides to change the narrative a little bit, or if it changes, right, get a high price to then potentially get short. Okay, and then there we are on the 1-hour time frame, sitting at that daily resistance level there. All right, so that's the update on this NZD JPY setup out of the weekend, and Benny posted that in the community this week. Right, so that one is up 105 pips from Monday. All right, questions on the NZD JPY?
Nope.
All right, cool deal. Now let's I didn't look at the DXY. My apologies. Here we are on the DXY, pushing long. All right, our crown pattern is still intact, headed to the upside. Headed to the upside. Right, so if things go the way we expect, right, we can see more dollar bullishness as the day moves on. All right, so that's the update on the DXY. Let's take a look at the I'm looking at the Aussie dollar, the euro dollar, the pound dollar, and then if you guys have any pairs you want me to take a look at, you guys can drop those into the chat and we will review those. All right, so here we are on the Aussie dollar, crown pattern playing out as we anticipated, right? Push down. It'd be interesting to see if we get a pullback before we get a continuation, right? So maybe we get something like this, and then that continuation to the downside, but we'll see, right? It's all going to be dependent on the Fed today, and then we also got Aussie data coming in tonight, right? So depending on what the Aussie data comes in as, that could definitely accelerate this move to the downside. So we'll watch that and see how things go there. Coming back to the 4. There we are, just continuing this move to the downside, right? We got a little bit of pullback yesterday, and now we're pushing back down. Okay, so we'll continue to monitor there. And then on the one, right, there's our fresh AB boundary, 382 pullback. So maybe we get another push to the upside. Another push to the upside through the morning to set us up for that Fed decision and a potential continuation to the downside like that. All right, so we'll watch that and see. But that's a quick look at the Aussie dollar. Like I said, continuing to move. The C to D move on the 4 is continuing its action to the downside there. So you got C, we got a lot of pairs that came into the zone and they're swinging, right? They're moving in our direction and they're doing the thing. So a lot of what we'll see as price is moving in a lot of these is just updates on where price is. And then it's up to us, it's up to you, manage your trade, right? Potentially moving your stop loss to break even, right? Or just allowing it to sit and stay, right? And just allow price to move toward your take profit level, right? And having the patience just to sit and allow the market to do what it does and move in the ABCD waves that we see. All right, so that's the Aussie dollar. Euro dollar. Similar to that Aussie dollar, down, right? And it makes sense. It makes sense, right? More of a, we'll call it a relatively hawkish Fed, but inflation hasn't cooled, so we're seeing things push to the downside. All right, that crown pattern also playing out. We come here to the 4. We'll take that out, and another C to D move, right? 8-6 retracement. We're making our way down. So looking for a matching day extension on the 4 at 106.727. Okay, and we'll get our pullbacks in between, but looking for price to continue to move to the downside here. Okay, so that one is on the move. 107 pips off of that 76 retracement. All right. And then as we come down to the 1, there's that continuation to that move to the downside. All right. We had a nice pullback here off of an 80-20. Boom. And now we're headed down. So we'll continue to monitor that move to the downside. I'm going to set that fib sequence there, right? There's sub fibs now, but we got a 50% retracement here. Once we get to the matching D extension, that'll take out that A boundary, and that'll make this our capital fib sequence. So I'm going to run those to the downside. Excuse me. Until that A gets taken out, and then we'll have that fib sequence running down like that. All right. So that's the euro dollar. Are there any questions there?
Nope.
All right. All right. So pound dollar. Daily time frame, this is where we sit. Haven't gotten to a 382 yet. And we're just hovering high in this range. We got a relatively strong pound, but we also got a strong dollar, right? So it'll be interesting to see how this ends up playing out. All right, we were running to the upside and now we're pulling back. We'll see what the Fed has to say today, but we'll also see what the BOE has to say tomorrow, right? And if we get any indication, we saw their inflation numbers come in below expectation, right? So could that be a catalyst for the Bank of England to say, hey, we're going to look at this, right? We're going to discuss what rate cuts could look like. If that's the narrative, then we could see this really start to fall off and push to the downside. So we'll wait and see what that conversation is. We'll come down to the 4. And here we are, all right? Fibs running off the low. We got a 618 retracement trying to make its way, but we haven't been able to do it yet, right? So bouncing back and forth here. We got this pullback, and we got to wait to see what the press conferences have to say to give us indication whether we'll continue to run up to the D extension or we'll push a little bit deeper and come back down. All right, so this one is kind of mixed on the lower time frames as we wait to see what the data is. All right, we come down to the 1, and we'll run our fib off of the low here. Boom. All right, move to the downside, took out our A. So we flip the fib, we flip the direction, and boom, there we go. All right, so we got a 618 retracement. We're moving to the downside. Do we get to this daily level here, all right, today at some point? And then we'll see what happens at 125. All right, so that CDD move is already on the go. So we'll watch and see how it progresses throughout the day. Okay. There we are. Any questions on the pound dollar? Nope. All right. So, team, you guys have any pairs you got your eyes on that you want me to take a look at? US 30. Let's see what it is, Donette. Let's see. Okay. My markup is still there from previous, so we're going to rock with it and see what has happened. I'm going to clean this up so we can see. There we go. All right, so here we are. All right, daily time frame, 80-20 scenario, daily resistance. We're just pressing sideways. Right, so the Fed's conversation, the Fed's decision definitely have an impact here as well. If they're not talking any rate cuts or any rate cuts in the future, any rate cuts anytime soon, right, a correction could come. So we'll watch this closely to see if we're able to move out of the zone to the downside. All right, so that's on the daily time frame, 80-20 there, coming down to the 4. See, that one got taken out as well. Here we are, right? Excuse me. You see our range. Take this one out. So you see we're just pressing sideways, right? We got a 618 retracement, but we haven't been able to break out to the upside. Okay. So we just got to wait and see what happens here on whether we get a move up or a move down, right? And as of late, investors have kind of shrugged off anything that the Fed has said, and they're just looking at some point rates will come down, so we're going to keep buying. Is basically what the sentiment has been in the stock market, right? So we'll see if that narrative changes today, or if it stays the same, right? So we need to break out in one direction or the other there, but we know on the daily time frame we got an 80-20 scenario. Okay, so as we come down to the 1, we'll see more of the same. All right, that consolidation is where we got to break out. All right, just like the 4. Okay, we did have, all right, we look here, we did have an 80-20 scenario, right, and it moved back down just shy of that 618 retracement, almost a TP2, but shallow retracement, 118 to 127 zone, breakdown, and then we press sideways, right? So that was an beautiful 80-20 scenario on the 1 hour time frame, and now we just wait and see what happens from here. Okay, cool. We're on the same page then. We're on the same page. All right. Anything else you guys got your eyes on?
G-Chef.
Yeah. it's pressing long. Got an 80-20 scenario here, right? We've taken out multiple key levels and we're pressing long. Shallow retracement just missed that 382. Right? And we're pressing to the upside here. So we want to see, we got that rate statement coming tomorrow. We want to see what happens between today and tomorrow. Do we get a catalyst to move this back down to the downside in favor of the Swissy, or do we just continue to run long here? Right. So this one I'm watching, Joy. That Swiss rate decision is going to be interesting. It's going to be interesting to see if they hold, if they have more of a dovish tone, you know, how they respond. So I'm sitting and watching this one to see if we get price to actually slow down and start moving sideways. Yeah, because right now the pound definitely has the strength over that Swissy. So it's going to be interesting to see how that moves. We come down to the 4. We got a 382 touch, right? And we're headed along there. So let's do this. I'm going to mark out this D extension on the daily time frame. So that we have it in place. So now as we move down to the 4, we can kind of measure everything off of that, right? So that 4-hour D extension is in line with that daily D extension. So that'll be interesting to see there. On if we continue moving to the upside. And then if we come down to the 1, that one is also in line with that 4-hour. So it's going to be interesting to see what happens. This one I would use additional confirmation on and just wait for either trendline break or a cloud break, and not just trade the zone here, just because the Swissy is definitely weakened over the past few weeks and months. So I'm kind of cautious on this one for that reason. But if we get something to come out of the BOE, or if the SMB is dovish, then we definitely could see the catalyst then come in, right? If you wanted to be more aggressive, you could go here like that. Boom. Yeah. So that's how I see that one, right? Definitely higher time frame 80-20, but rocking with a little bit of caution here to see how things transpire. Right. I just dropped the cloud on there. You can even use the cloud break as confirmation on that also. So we'll watch that and see how it continues to move. But yeah, keep eyes peeled on it, right? Could potentially be a good move. And maybe we get to this 4-hour and 1-hour D extension, but don't get to the daily D extension. And then we see that flip, right? So that could also be something that we see. So we'll keep our eyes on this one, Joe. I appreciate you posting that. Any questions on this pound Swissy?
Nope.
All right. Cool deal. Aussie NZD. Somebody's been running. So you guys see off the low on the daily time frame. Boom. Take off, right? Take off to the upside. We'll drop a support level here. Boom. All right. And we got a support level here. There we go. So moving long. It looks like next stop 108.267. All right, from a daily time frame perspective, right back to previous highs. Okay. We'll drop these down. Now come to the 4. There's your move. All right, just take off to the upside. We got At 382, we missed that 50% retracement. Gotcha. We got a 382 here, just shy of the D extension here as we're running to the upside. All right, so it looks like that 4-hour D extension is in sights and will be hit sometime soon. Only a couple pips away there. As we come down to the, actually let's do this. Just to line these up a bit. There we go. So now coming down, see we're super close to that D extension there. Now on the 1 hour, two different ways to look at this, right? So originally we had our 80-20 scenario here, right? Beautiful move to the upside, right? I don't know if anybody held this move long, but that's 232 pips from February 22nd, all right? So a month's time, 230 pips, boom. So 4-hour D extension is in sights. That's in line with the 8-6 retracement on the capital fib to the downside. Okay, so that's one way to look at this. The other way is flipping the fib, running it to the upside here. So we do have, right down this point, we got an 80-20 scenario here on the sub fib, shallow retracement, 118-127 zone. Are we able to stay below this 108-267 level? Right? Do we hit this 4-hour D extension and then get a reversal out and give us a low price? So we'll watch and see what happens there, right? We got data coming out later on today and tomorrow. Let's see if we get some sort of catalyst that would give us that type of action, right? Maybe that employment data comes in weaker than expected, right? And we see the sell-off then come in, right? Different scenarios there from a fundamental perspective that'll give us a catalyst, but let's watch this closely. All right, let's watch this closely. It's not far. Let's see. 25 pip stop loss, put it outside the D extension. If we put it outside that A boundary, right, push it up to around 30 pips. So that's not a bad scenario, right? Either your deep retracement C to D move or your 80-20 scenario, right? Definitely want to keep our eyes on. And you can add in your additional confirmations. This one is always interesting because, right, they're in the same region. So this one definitely gets interesting as price moves. What's up? All right, so that's what it looks like there on the 1 hour. I'm gonna keep my eyes on this one. This will definitely be interesting to see. Questions on the Aussie New Zealand. Nope, no questions. All right, cool deal. Keep our eyes peeled there. Take a look at oil. It's rumbling along. All right, finally broke this 79, 73 level. Been pushing to the upside ever since. We're getting a little bit of a pullback now. This is on the 4. Let's come back to the daily. So this one's going to be interesting for many reasons, but there's our capital fib sequence to the downside. Okay, we got an 8-6 retracement, not able to break out. We're running back to the upside. We still got conflict in the Middle East. We still got conflict in Russia, in Ukraine. This is going to be interesting, right? We broke this key daily level. So just looking at it, just sheer technically, right? Looking for a break and retest, and then a continuation long. right? Just off of that, that's what I'd be looking for there. We got another level of daily resistance here.
Because I was gonna ask you, that's what I forgot when you was doing the news when they was talking about that drone attack. Like,
yeah, hitting those it was like 2 oil refineries or something like that.
Yeah. And they said it's gonna take them a while to get that back up and running. How would that, since we, so to speak, not getting our oil from Russia, but how would that affect supply?
Yeah, it definitely could, right? So we're not getting oil directly from Russia, but it's it's flowing through Italy and France, and then coming out. So it's not directly coming from Russia, but it's coming from Russia. It definitely could affect the supply side, and they're already the UAE was already still implementing and sticking with their production cuts. So this just kind of adds to some of those supply concerns. So we definitely could see this continue moving along for that reason, right? And as that war continues to linger on and escalate in some ways, we could see oil just continue to push to the upside. I'm definitely bullish on oil with all of the unrest around the world. The Israel situation, how that could potentially impact oil countries, and the ongoing impact in the Red Sea. There's tons of concerns there from a war perspective, right? And how some of those things, small escalations, can impact things in a great way. So I'm definitely looking at oil continuing to the upside over the long term. I'll choose those words, right? But breaking recess there on that level, but I definitely think that could impact it, and just the continued war can impact it as well. Continue moving price to the upside. There's your capital fib on the 4, right? Similar scenario as the daily. We're trying to move out of this zone and move to the upside, right? So as it comes down to the 1, I'll run a sub fib off the low, and we'll just look at these last moves long here. All right, so makes sense. We got an 80-20 scenario here on the 1. And that daily support level comes in line with a 382, right? So that kind of supports that break and retest idea. Shallow retracement, 118, 127 zone. Boom, we're breaking down, right? So maybe we get a little bit of a crown action here. Something like that. Right? But looking at this moving to the downside. So if we get a pullback on this one, I might take this short for this pullback on the retest. Get to that level. You short on that, Joy? 82.56.
Yeah. I got my long running in another account.
Gotcha. Okay. Beautiful. Great work. Joy's been running this oil thing for a long time, right? So beautiful work on that, right? And now playing the retracement here, and then looking for a continuation to the upside there. So, yeah, that's what it is on oil. That'll be interesting to continue to monitor that.
I guess what I'm working to is trying to find a favorite pair.
And just sticking to one?
Well, like that be my base. I still want to get used to all the other currencies, but just have that one go-to, so to speak.
Gotcha. Give me 1 second, everybody. All right, I'm back. Yeah. So let's see what happens there. Okay. Yeah, let us know what you see, Donette. Let us know what you see. All right. Any other questions on oil? Nope. All right. All right.
Hey Ryan,
Yes, sir.
you got a 1 hour 80-20 setting up on the Swiss yen.
Yeah. So I'm curious on this one though, bro. Let's talk about it. So we got a ton of stuff happening on this, right? And these yens are in interesting situations. Everything been running long. Got 80-20 on the monthly time frame, right? We've been eyeing this 176 level for quite some time. We got an 80-20 on the weekly time frame, right? We hit the 382 on the daily time frame, but we're stalling in this 118, 127 zone, right? Had a breakout of the consolidation, and now we pulled back within it. We come down to the two scenarios here, right? One scenario is 786 retracement, matching the extension at 173, 370. So the question is, where do we go ultimately, right? Is this strong move to the upside? We know we got Swiss data coming out tomorrow. I was looking at a pullback here to see if there would be an opportunity to get back short. So this one is interesting, the way the yens have been running, but come down to the one, and you got your 80-20 scenario here. So I saw this one this morning, bro, and I didn't immediately pull the trigger on it. Because as the dollar yen has been running, so have the others. And so I've been kind of cautiously approaching these shorts until that dollar yen gets to that 152 level. But with some additional confirmation, I definitely think this will be interesting to see. And maybe we get that pullback and then a continuation long throughout the day.
Yep, it's in the zone. So look for the additional confirmation. Maybe drop down to your 15. Right?
Yeah, I got you. Yeah,
look for a breakdown and a pullback to a fib level and run a sub fib from the top down off the lower time frame. If it pulls back in your zone, then it puts you in a highly favorable risk to reward ratio. Yeah. 15 minute, 5-minute play. And see if it gets you your pullback. So what are you on there? You on the 15?
This on the 15, yeah.
Yeah. So I would just run it from the top down. Run it from the top down there. See if it hangs in. See if it pushes higher in the zone and then breaks down. You take that up fib off, right? Because we know that it's an up AB boundary. We know it's an up AB boundary. Run your inner trend line. That's broken. To the upside, your inner trend line to the upside on that, and see what'll happen with it.
I'll follow you on that.
Right. So if and then if that wave doesn't serve as good confirmation for you, then let it push down, hit the D extension, and catch the next wave. So can you pull the TP1 level down to the 15? Right. So we got our ways.
Yeah, that's a good call.
Yeah, that's how. I mean, just to give an example of how we always talk about additional confirmation. That's a way that you can play that. Because I agree with you. I definitely agree with your observation on that. Like they're a little tricky. It can be tough when the market really gets running in one particular direction pretty strong. So that's that's how I would look to play that one.
I'm with it.
Yeah.
I'm with it. Yeah. So look for another small push to the upside and then turn over.
Yeah. So that way you cut that risk way down, right?
Yeah. Around 65 pips ish. 60 pips. It still gives you to the one even if you were to take it there. Yeah. It's a good thought on that one, bro. I like it. That makes sense, good people? You guys understand that Benny walked through that?
Yep.
Yeah.
I know some people had questions on additional confirmations, going down the lower time frames and looking at how that transitions. So cool. Yeah, so we'll watch this one. We're getting that push up as we speak. All right, questions on the Swiss yen. Okay. All right, we'll while we're looking at them, we'll do a quick touch on these other yens. Aussie yen coming into that day, that monthly level, 99,370. All right, pushing to that level. We got similar things setting up on all of these, right? So on the 4, there we are. We got to break that level to get to the D extension there, but been a long, strong move to the upside, right? Bullish action. A lot of times you get retracements to take back some of those moves. And here you go on the Aussie yen. Similar to that Swiss yen. We got the bearish break, pullback, and this would be your setup. Okay. Boom. Trend line break, pull back, retest. All right. And same scenario, you can drop down to your 15. Run your fib the same way off the high, right? We already got a cloud break there and we pull back to retest the cloud. But boom. On this one, you're already sitting at deep retracement level here, right? So there's an opportunity there for an entry on that Aussie yen on the 80-20 as well, right? You don't have to take all of them, but watch them, pick the one that fits you best. All right, so that's the Aussie yen 80-20 on the 1. Questions on that one?
Nope.
Actually, let's go back. CAD yen. Push it to a key level, right? Been struggling at this 111.822, but we're headed there. On the 4, we got a 50% retracement. Pushing long, coming into that key level. On our 1, boom, shallow retracement, 118 and 127 zone. Pushing into that zone, do get another push up and maybe tap this 111, 784 to 822 range, right? Do we get one more push to the upside here? And then that moves down here, right? But another 80-20 scenario to consider. Okay, and all these yens, they all ran the same, right? Euro yen pushed up into a key level, right? And this one is breaking that 164, 269 level, right? So come back here on the daily, just so we can get a full view on this one. This one is going to be interesting as we move forward, I think. But running long, trying to break that level. I'll show you what that box is in a second. But we come back to the weekly time frame, right? And we got a 50% retracement already. So the question is, do we break 169 to get to the D extension? That might be unlikely, but we could. So see what happens here in this range. We come back to the monthly. If we break that 169, we could push into this 118, 127 zone. So this will be interesting to see how this moves overall, to see if we get this longer term push to the upside and then break down from there, right? So we'll then have a monthly D extension, a monthly 80-20. Maybe we don't get to the 175 level. Yeah, maybe we do. If we push into this 118, 127 zone, that'll give us the D extension on the weekly, right? And that'll clear that up. And that'll also hit the D extension on the daily time frame as well, give us a new fib sequence. So that'll be interesting if we break 169, 852. We come down to the 4, and this is where that green box comes into play. If we break this level, push into this 118, 127 zone, right, that gives us an 80-20 on the 4, right? So we got some confluence in this range on multiple time frames, okay? So this one's going to be interesting to watch. So now as we then come back to the 1, boom, just missed that 118, 127 zone there. We broke, we came back to retest. So do we get another push to the upside to push into this 118, 127 zone? Right? So that's the Euro yen. So tons of things lining up there. So as we move through the day, watch these yen pairs, and we'll see what kind of confluence we get, and see how it moves as we get closer to that rate decision. On this pound yen, pushing into the 118 and 127 zone on the monthly, shallow retracement 118 and 127. Weekly time frame, same deal, shallow retracement pushing into the 118 and 127 zone on the weekly, right? So higher time frame 80-20s. On the daily time frame, we're moving through the 118 and 127 zone, right? And this is that monthly, weekly 118 and 127 zone here, right? So we got 80-20 on all of our higher time frames. So do we get things to start to consolidate, move sideways as we prepare for that decision coming out of the UK, right? So on the 4, we hit our D extension, right? And this is our capital fib sequence here, D extension achieved. So reset at some point to come, right? Reset at some point to come. And we'll look for a new AB boundary to form. Now as we come back down to the 1, here we are. Fresh AB boundary, shallow retracement. Do we get another push into the zone? And then that action. So these are going to be interesting to watch as we move forward.
So I have a question about this.
Yes.
So because of the strength of the yen is the reason why we wouldn't consider that the extension as the reversal?
This D extension here?
Yes.
It could be. It could be. I'm looking, so the way I'm looking at these in my mind right now is all of them have been really following the dollar yen, right? And that's kind of told the tale of where the yens move overall. But also, this is just part of my trading plan. I want to see an 80-20, right? So I want to see price pushing here for selfish reasons, right? But this could be the reversal. It could be the reversal on the 1 hour, right? And we could see price continue moving down. And from a higher time frame perspective, it makes sense, right? We got 80-20s across the board and the D extension on the 4, right? So it definitely could be time for that reversal to come, right? And if it does, I'll have to figure out what my confirmation points are on this, because ultimately I'm going to swing trade this off the higher time frame, but just trying to take all things into account when it comes to the yen, the Bank of Japan, and the market's response since yesterday. So I'm trying to take all of that information into account. So I'm just playing these a lot more cautiously than I normally would. Personally, I am. Just because the market has been bearish on the yen because they already priced in the rate increase and there hasn't been any information on anything different, right? Which brings us back to the dollar yen. And as we get closer to this 152 level, 152, 153, then I think we could hear some chirping coming out of the Bank of Japan. If the Bank of Japan starts chirping, right, we could see all these flip, and that could be potentially the initiation for the rest of things to follow over the next coming months, right? So that's how I'm looking at it overall. I'm really trying to be patient, right? Because I'm looking at opportunities to start building positions on these. It's just a matter of when do I start doing that, right? So that's my thought process and my approach to these yens as they're still moving. It's still moving along. I hope that makes sense.
It does. Thank you.
Mm-hmm. Any other questions? Questions on anything that we covered this morning? Nope. Benny, any final thoughts before we wrap it up, bro?
No, sir. Great session. Appreciate everything you do for the group, my man.
No doubt, man. I appreciate you as well. All right, good people. Have a phenomenal Wednesday. We'll be back at it tomorrow, 6:30 a.m. Eastern Standard Time with my awesome partner, Mr. Benny Allen. Until then, we'll see you in the community. Peace.
Thank you.
Welcome.